It was the middle of financial crisis, and I was giving up a secure, well-paying job to follow my passion. But now, more than 10 years later, I can honestly say it was one of the best decisions.
Hello and welcome to the Gross Profit Podcast. My name is James Kennedy. I'm the CEO and co-founder at procurementexpress.com. We take the hassle out of managing your company's spend without buying an ERP, but we are not here to talk about that today. Instead, I've got Luca Aversa, direct from the birthplace of banking, Venice, Italy. Or it certainly is in my mind. In my history books, the Medicis made their money in Venice back in the day, and that's where banking had its modern birthplace. And it's no better place for Luca to tell us about his experience coming up through the banking world, and specifically how having a CFO with the right banking connections and understandings can be a superpower for your business. So, Luca, you're very welcome to the show. Maybe you can kick us off by telling us something about you that not many people know.
Hi, James. It's a pleasure to be here. Thank you so much for having me. Well, yes, ever since I was 6 years old, I've been practicing karate. It's a martial art that obviously teaches discipline and how to fight. But as you grow older, you realize it's much more than that. It becomes a way of life, a way of interpreting situations, and a way of responding to certain events. When you're sparring in traditional karate, which is the style that I practice, it's not about having the biggest muscles or being the physically strongest person in the room. What really matters is timing. It's all about timing, choosing the right moment to attack or counterattack. Well, since my university days, I started to see how that kind of mindset was incredibly useful. Whether I was studying for exams or navigating work challenges, karate gave me a mental and emotional framework to tackle them. It really shaped my character, and to this day, I approach business situations in the same way, as if they were sparring matches. Of course, we're talking metaphorically here. The key takeaway isn't the idea of fighting, but the mental discipline that martial arts like karate can instill. Do you know some martial arts?
Yeah, so like I've got I grew up playing judo, and I 100% get the timing thing. The timing for me is about when to commit, like when to know when to commit, like because there's no point in pretending. That's the biggest lesson I got, was like you can half do something is way worse than doing nothing at all. So half committing to, I guess, an attack in this case will really get your ass handed to you. But it's a knowing when that, and if you have to really go for it when you're going for it. So I love it. That's great. Now, I won't make fun of you for playing karate, because of course all the martial arts like to think they're the best, but I do respect how do you still teach karate, or is this something you did earlier in your career and now you've passed on to someone else?
No, I only practice as an amateur. Yeah, no, I'm not practicing anymore. Yeah. And I like the analogy
tell me,
with judo.
Yeah, well, my brother-in-law is Taekwondo black belt, and he says he calls us the huggers. All we do is hug each other.
Yeah.
That's it. We don't fight.
Yeah, that definitely fits.
So tell me, not only the best of the best get onto the Gross Profit Podcast. So tell us a bit about your career, how it started, and how you ended up advising companies offering CFO services.
Yeah, well, one thing that has been constant throughout my journey is the combination of theory and practice. Right after high school, I enrolled in a university to study economics and business consulting. At the same time, I won a public competition to work at what is now Intesa Sanpaolo, one of the most important banks in Italy, but also in Europe. And those years were intense. I worked during the day and then studied in the evenings and on weekends. So very intense. Balancing both things wasn't easy, but it allowed me to immediately apply what I was learning at the university, immediately applying to real world. I worked in the corporate banking division in Intesa San Paolo, and this really gave me a head start in terms of experience. While many of my peers were in school full time, I was already putting theory into practice, day in and day out. I owe a lot of my early glow to the bank. And in particular, I'd like to name a person, my mentor, Daniele Zampierone. Thanks to him, I was able to get deep into corporate finance from the very beginning of my career. And then, after earning my degree, I went on to complete a 2 year master's program in banking and finance with Bocconi, the University of Milan. Again, while working full time. So it was very intense, also, this experience. It was demanding, but totally worth it. Corporate finance has always been my passion, and I knew early on that it would be my area of focus. But as any CFO knows, you also need to master the full spectrum, so administration, finance, and management and cost control. That's why in 2010, while the aftershocks of 2008 financial crisis were still being felt, I made a bold decision. I left the bank to become a business consultant and so a fractional CFO, joining a major professional firm in northeast Italy, always near Venice. Well, that moment I really rounded out my skill set. I dove deep into areas like administration, taxation, extraordinary operations, and business and management control. And all of these disciplines are the key for a CFO. I think that you can agree.
Very good. So I'd like to bring you back to the start of your career with the bank because you've worked your way up through the bank, if you like. And I'm, straight
Yeah,
out of school and like,
yeah.
I guess a kind of apprenticeship, if you like. So a newly minted school leaver, what jobs did they give you then? Because I'd like to contrast them with the jobs you had later. Well, what's the first job? Were you selling debt or were you just doing a
Yeah.
tea round or how did you get started? What were the first job you had?
Well, at the very beginning, I began with the retail, so the family consultant, but it lasts only 6 months. Then I started to work with companies in the corporate division because my mentor saw me and he understood my capacity, and I figured out to become a business consultant, so in the corporate division. So
So
I had only few months.
what's
Yeah.
So what sort of clients were you dealing with? Were they shops or like what were they small manufacturing? What sort of size of
Yeah.
business were they at the beginning and what sort of things would they need money for?
Yeah. At the beginning, they were the small companies, shops, or a small manufacturing company, and but they needed to finance their plans to investment for machineries, for new machineries, for develop their business abroad. So the demand was very diversified.
On that role you had there, was it like a banking official role or was it kind of a sales role? Like did you have a quota or was there any or was it much more like just an official helping with the paperwork and that's it? I'm trying to get a sense of what is it like to work as a loan officer, I guess is what we call it here.
Yeah, it was the official role. I worked in the branch with my colleagues, and everyone had was specialized in a sector. So in the branches where I worked, I was the corporate business referent for all the clients.
So you would deal with inbound inquiries, I guess, and then you would give them a phone call, maybe go and meet them, like
Yeah,
get an understanding of their. You'd be the person.
yeah.
Yeah.
I liked a lot to go to the factory, to visit the plants, and to talk with the entrepreneur. And it was very fun. And I think that I rounded out my skill set very well.
And can you remember any business that you particularly liked, or you said, hey, this is an awesome business, these guys are doing really well, or was it tough for everybody?
When I decided to leave the bank, there was the financial crisis. So it was a very tough period. And I remember very well the first client that I had when I left the bank. But during the bank experience, I don't think I have a preferred one. Yeah.
Okay, all right, fair enough. They were all the same. Cool. So, you graduated, I guess you worked in the bank for many years, and then you used the connections you built up there to, yeah. So you used those connections what you built up in the bank to find your first client. And tell me a bit about
Yeah.
your first client when you left full-time employment.
Yeah. Well, to me, leaving the bank was easy. I was sure of my decision, but people thought I was crazy. It was the middle of financial crisis, as I said before, and I was giving up a secure, well-paying job to follow my passion. But now, more than 10 years later, I can honestly say it was one of the best decisions. And let me give you a concrete example. One of my favorite clients is a company I've been working with for over 10 years. We basically started together right when I left the bank. They were launching their startup, and today they are a solid company based here in Northeast Italy, operating nationally and across Europe. But back then they had just 50,000 euros and their ambitious idea, only that. They wanted to build a company that produces technical cases called flight cases for the entertainment industries and the motorsport industries. And they needed to find their first plant, to buy machineries, to hire their first workers. Clearly, the initial capital, 50,000 euros, wasn't nearly enough. They couldn't afford an in-house CFO, and I was their external CFO, my first role. I helped them build a multi-year business and investment plan from scratch. It was like constructing a house from the foundation up, analyzing each phase, identifying risks, preparing for contingencies. When we went to present the plan to the banks, all we had was a strong vision, a good business plan, and the experience in the sector of the founders. But we had considered everything: investment plans, working capital needs, and several alternative future scenarios. The lenders, the banks, saw that the team knew exactly where they wanted to go and also had a plan B, a plan C, if things didn't go as expected. They got the funding, and today, as I said before, they're a thriving company with dozens of employees and a strong growth prospect. I still work with them, and I'm proud of how far they've come.
Very cool. So tell me a bit about at the start, what sort of banks you used to get them going, and then tell me a bit about the three different types of banks you deal with generally, and how you built relationships with each different type as the business grew.
Yeah, well, I emphasize always that choosing the right financial partner is very important. For example, in Italy, we have many types of banks. The popular one, the biggest one, national, international, like Intesa San Paolo or Unicredit, and the popular bank. And I can say that each bank has different sizes, specialties, and client profiles that they prefer. So choosing the right bank and diversifying across several of them is a strategic decision. But I can also say that for companies with strong development plans, venture capital or private equity funds can also be an option, depending on their stage and goals. Because this one, so venture capital or private equity, prefer to deal with the big operations, but small and medium enterprises, for me, it's better to handle with banks because they can afford also a small operation or give them more liquidity.
And Thomas, let's go through these a little one by one, I guess. So in Italy, northern Italy, venture capital, who
Yeah.
are the big players there, or like is there venture capital is largely associated with America, startups and maybe London. What's the scene like in Venice or Milan?
Yeah, but well, the center of the venture capitalists and the private equity companies is Milan, but also here in Veneto, in Padua or Venice, there are a lot of them. But it's very important to go to them with a good proposal, with a good business plan, and try to go with big operations because they prefer to deal with more with bigger companies. And of
Okay,
course,
so
yeah,
unlike in say, they don't typically VC looks for established companies, not just startups, generally speaking, in Italy.
yeah, that's right. Yeah. Well, and
Okay.
I told you the story of this startup, but not all companies that I support to start from scratch. Many are already well established, but lack internal financial leadership, or they didn't have an in-house CFO. And so my typical clients are small and medium-sized enterprises with revenues from 5 to 50 millions. And these clients we deal especially with banks.
Okay. So if VCs in that area deal with established companies, what is the difference between private equity and venture capital in this market?
Well, venture capitalist deals with startups and you can present them a new business. You can talk with them for startups, while private equity prefer to deal with established companies or big enterprises.
So when you're approaching, working with a client and you're trying to
Yeah.
get them a loan, what's your approach? What is your approach that makes you stand out and to help them secure the loan they need?
Yeah, well, I have a solid strategic and results oriented method, one that is deeply rooted in a proactive mindset. One of the key tools that I use is scenario analysis. For every business plan that I prepare, we prepare at least three versions. A base case built around the company's own assumptions, usually gathered from team leaders like the CEO or the head of sales, the HR manager. Then we put down a worst case scenario, which I develop independently using stress tests. And then finally, an optimistic scenario to help us understand what to do if we exceed targets and financial liquidity. This scenario based mindset helps us remain flexible and ready. And I work closely with all departments, sales, purchasing, HR, and build tailored budgets for each. But I also explore more innovative approaches beyond the traditional budgeting, which can be rigid and outdated. One such approach is beyond budgeting. I don't know if you ever heard about it.
No, tell me about it.
Yeah. The idea is to give managers more autonomy over financial resources, aligning their decisions with the company's North Star metric, that is the main strategic goal of the company, rather than closing them into fixed budget allocations. This avoid common pitfalls. For example, if a team runs out of budget mid-year, they can't pursue programmed investments. Or if they have leftover budget at year end, they might spend it just to avoid losing it, even if they're not fully convinced of the investment. Beyond budgeting creates more flexibility, a more strategic approach to resource management. It's about empowering teams, embracing continuous planning, aligning goals with reality rather than with forecasts made 12 months ago. And I actually applied this philosophy in a mid-sized manufacturing company where we shifted from traditional budgeting to rolling forecasts and dynamic KPIs. And the results was fantastic. We saw faster reactions to market changes, better engagement from departments, more resilient, and a responsive business model. It's not just theory. It works when everyone supports it. And well, another concept I often introduce to clients, especially when we're trying to align finance with strategy, is the use of the North Star metric, as I mentioned before, and the OKRs, objective key results. Well, the North Star metric is that one key indicator that best reflects the long-term value a company delivers to its customers. And it becomes a guiding light, helping everyone stay focused.
Yeah, so maybe give me an example of a client that you've worked with and what would be their North Star, and give me an example of a good OKR.
Well, the OKR are clear objectives with measurable key results. And an example, this manufacturing company wanted to be the official reference for all their customer for delivery their goods through the flight cases. And so they try to align all the work throughout the company to this objective. And teams had more clarity, managers felt more accountable, and financial planning became much more aligned with strategic priorities. It really changed the game.
And give me the example, what was their North Star in that case?
North Star was profit for a single product sold.
Right. Okay.
So they
good.
tried to
Cool.
maximize this metric.
Very good. So tell me, who is an ideal customer for you, Luca, and how can they get in touch with you?
Well, I work primarily with small and medium enterprises in various sectors. For example, the manufacturing, construction, real estate, and distribution sectors, typically with revenue from 2 or 5 million up to 50 million, more or less.
Very good. And how can they get in touch with you? What's the best way for them to reach out to you?
Well, you can find me on LinkedIn under Luca Aversa, LA Corporate Finance. Feel free to reach out via direct messages. And if you would like to schedule an online strategic session, I'm also available on equity scheduling on Squarespace, where we can book an online meeting.
Very good. All right. Well, thank you very much for coming along, telling us a little bit about your experience from Italy. I appreciate it. Last month I was in Lake Iseo, having a beautiful time with my family. You're a lucky man to live in such a beautiful part of the world.
Yeah, I agree. Yeah. Thanks again for having me. It was a real pleasure.